Hello and welcome again to another episode of the Bitcoin News Show right here on the YouTube channel of the World Crypto Network. We're talking Bitcoin again this Monday evening at 8 p.m. Pacific. We got a great show lined up for you tonight. We're going to be talking about Ethereum, R3, and BitlendingClub. Of course, we got our esteemed panelists with us here today. Joining us, we got Tone Vase and Gabriel D. Vine. So, Tone, how are you doing this evening?
I'm good. It's getting a little late, but happy to be on again.
Awesome. Yeah, we super appreciate you coming on. We know it's, we know you're on Eastern time and everything, so it gets pretty late. I don't actually know how you do it, but we definitely appreciate it. So, Gabriel, how you doing tonight, man?
I'm doing great. I agree. I think it's really impressive how Tone keeps this late schedule. Then again, if you think that he doesn't have a job right now, maybe it's a bit more understandable. Still, I agree with you. We do appreciate it a lot. And great to be here on the Bitcoin News Show again, where I got my start as an internet talking head, useless pundit.
That's correct.
Yeah,
that is where I picked
you
him
beat
up.
me to it, Gabe. You beat me to it. I was going to say, if Tom had a job, this might not be happening.
Oh, man, don't ever get a job, Tone. Ladies and gentlemen, we got to hope Tone never gets a job. All right, cool. So thanks so much, guys, for joining us tonight. We got a lot to talk about, so I think we're just going to get right into it. We actually had a special guest planned for this evening, but he had to cancel. So hopefully we'll get him on another episode at another time. I've been trying to have special guests on every episode just so we can get some more outside opinions and so we can kind of talk more, spread the word more about Bitcoin with new people. So get some new perspectives and all that good stuff. So we'll start with our first topic this evening. It's going to be talking about Ethereum and the price, how it has sunk to a 9-month low. So, we've been very critical of Ethereum on the show here on the WCN. And we're really still kind of confused as to how it took so long to get this low. But I still got to get your guys' opinion on what's going on right now in general with Ethereum and maybe why the price is sinking so fast. And so first we'll go with Tone. What do you think about this, Tone?
Well, I'm not surprised. I mean, I've been trolling Ethereum a little bit lately. I've always kind of ignored Ethereum. I've always spoken out against Ethereum, but I never really, did much with Ethereum on Twitter, never really tweeted out any price charts. And I kind of just poked at them a little bit, but the last couple of days, it was just over. I think the DAO really killed it. I mean, it was just denial. People were in denial going into Ethereum. Again, Ethereum is one of those things, it's my problem with Steam as well, is that there are so many bad things in Ethereum. There's multiple scams involved. It's not just one. It's not one smoking gun. Something is obvious, one coin. Well, there's not even a coin, right? It's just literally all UI. And it's easy to scam bust that one. Things like Steemit and Ethereum, there's just so many moving parts, and most of them are absolutely terrible. So it's very difficult to just explain why I've considered Ethereum a scam from day one, even before day one. The moment I watched them sell tokens that didn't exist, it was a scam from that day. There was nothing there. Then they eventually launched, and I was still a little new to crypto. I didn't really speak out as much, and slowly it became obvious to me after understanding Bitcoin and blockchains. The biggest question I'm still raising, I just raised it on a panel at a conference, to me, who needs decentralized smart contracts? And that was my biggest deal. I'm not a developer anymore. I've only developed a little bit. I was bad at it. So I'm not gonna stand here and talk about Ethereum from a programming side of things. I just know that it sounded like there wasn't any structure there. Just everybody was just happy they can do whatever they wanted, and it turned into a big mess. But As far as conceptually, right? So I'm good at my job on Wall Street was to make sure that programmers are programming the right thing. I have to talk to the financial guys, to the CFAs, and I got to make sure the programmers are doing what needs to be done. I'm the first person to check what the programmers did, and then I release it to the financial guys. And if there are issues, the financial guys come to me. I figure out where the problem is, right? Is the problem the financial guy's understanding of finance? Is the problem in the code? And if the problem is in the code, where's the problem? Is it a database problem? Is it a C++ problem? Is it a UI problem because your UI is also aggregating numbers? Or is it a quant problem? Is it a modeling issue? So I had to figure all that out. So I understand, I don't want to say I understand code very well, but I understand developers very well because I'm the one that has to work with them, and they don't even always speak English, and they're not always even in the same country as me, and I got to deal with them. So Ethereum, to me, represented something that had absolutely no coordination, even though whatever Vitalik does, everyone listens to, but that's not how it was supposed to be designed, but that's what it became. Probably getting a little off topic here on the price, but to me, the biggest problem with Ethereum has always, this is why I stay away from the Turing Complete. That's more for the programmers, even though just my rudimentary understanding of it was that it was going to be a disaster because developers are never on the same page. Somebody has to get them on the same page. I mean, actually on Wall Street, like one of the biggest problems, and I've been listening to this problem, I've been on Wall Street for 10 years. And one of the biggest issues back and forth that I've heard in every developer room, what are we going to use to check out code, right? So if one developer wants to use code that another developer may be using, what's the system? And there's like two prominent systems to use. I already forgot what their names were because I've been out of that space for about 3 years.
Yeah, Git.
Is it Git? No, it wasn't Git.
Subversion?
It was like, yeah, no, it was like specific terms.
You're not talking about source control?
Man. Yeah, source control. There's another one.
Well, source control is what is basically what you're talking about, controlling the source code.
Right, but there's like multiple ways to do it, and in every room I've been, they always argue over which one. Yep, there you go.
SVN.
Those are the acronyms. I'm very familiar. Yep, SVN. Yep.
Yeah, that's all source control.
Yeah. So they're just always arguing over that stuff. Anyway, my problem with Ethereum has always been, who the hell needs decentralized smart contracts? Look, I understand smart contracts conceptually, right? You have a piece of code that is going to execute after parameter X, Y, and Z. But who the hell needs this stuff decentralized? I keep trying to explain to people, decentralization is only useful and is only needed to prevent censorship. So if your smart contract is a legal contract, decentralizing is just stupid. It's stupid and it's inefficient. And for some reason, everyone on the Ethereum side wants to argue with me on this. The reason they want to argue is because of the damn tokens.
The arguments that they keep presenting, I actually kind of had a comment on CoinDesk today that kind of encapsulated all of them, Tone. So actually, we're going to go through a few of those in a minute after we go to Gabriel and then Blake.
I'm just going to make it quick.
Oh, please finish it up.
So, yeah, I'll make it quick. I'll at least try to. So this concept of decentralizing a smart contract, I found it to be completely silly because no one is censoring your smart contract. Now, if you're going to stand there and argue with me, well, we don't have a good system for assassination contracts. They need to be decentralized because they are being censored. And I would say, I agree with you. Go build Ethereum, right? But like other than that, I mean, there's just a handful of other use cases in the first world where you need the censorship-resistant property in your smart contract. There's really no need for it otherwise. Now back to the price. It was all speculative. There was never a real use, and sooner or later it was going to be shown. And the DAO really put a nail in that coffin. It caused a split in Ethereum. Now they're hard forking left and right. And look, it's going to get bad. It's going to get a lot worse. I just don't see this thing turning around. And imagine if they go proof of stake. I mean, that I've been talking about that being a disaster for years. There's just nothing. I mean, plus Vitalik is like the sole ruler of that platform. It was literally designed for a bunch of guys to just get rich on that token. I mean, yeah, it launched, and then the hype kind of took over, but it's going to go back down. There's nothing there.
Do you have a price target, Tone?
Zero. I mean, they never go to zero, right?
It can't go to zero, right? So
no, it can't go to zero. You know what?
Zero.
You know what?
He goes for the throat with the zero.
Okay, here's my price target, right? So I said when Ethereum forked into Ethereum and Ethereum Classic, I said that the two will reach parity. And I still believe that Ethereum Classic and Ethereum will reach parity. Now, at the time that I said it, I expected it to reach parity at around $7, but now it's looking like it'll reach parity at around 80 cents. So there you go.
Okay, that reaching parity, that's interesting. I think that's very likely as well, but I think it would be a little bit higher than that. I think it would reach parity around $3 or $4 because remember, Ethereum Classic is the original chain, so I mean that still has value. That has a team around it who actually has a plan for the long term and is not going to go to proof of stake and things like that. So, and it's not ruled by one single person and such like that, and has definitely not had the attack problems that Ethereum has had. So, I think Ethereum Classic will still be a couple bucks for a while, right? Or what do you think, Tom?
Does Ethereum have a team? I don't think Ethereum Classic has a team of coders. And I said this also, and I love this idea. Ethereum, basically, Vitalik Buterin became the, the test dev developer for Ethereum Classic, because Ethereum Classic just gets to sit and watch and see what Ethereum is doing, and if they like it, they'll adapt it. And this has been my reason for why Ethereum began this hard push to go to proof of stake sooner than later, because they don't want to be the test monkey coders for Ethereum Classic. They want to completely go in a different direction so that they are no longer, writing code for Ethereum Classic, and Ethereum Classic has to get their own developers. Right now, Ethereum Classic is just sitting there deciding what to use in the code.
Well, they're also still working.
The Vitalik writes.
They're also still working on their own stuff too. But yeah, I agree that they're definitely using this as an advantage, an advantage to take advantage, an opportunity to take advantage of just waiting and seeing to see what happens. If Ethereum can pull itself out of these attacks, if it can fork finally to fix these attacks, I don't really believe that it can, because I believe the flaws are fundamental to the platform. But we'll see what Gabriel has to say. What do you think about all this, Gabriel? The price plummeting to a 9-month low. And the not just in dollars, but it's also the recent plummet, of course, over the past few months of the ETH/BTC price, Ethereum against Bitcoin.
Yeah, as you called out on the pre-show, I am wearing my classic donut shirt.
Holy shit.
Sprinkle donuts, which I actually, once again, don't like this flavor, so stop sending them to me, all my fans. I really appreciate the thought, but I don't actually like the pink style, but love the shirt. And it's a little bit too big now because I haven't been eating that many donuts recently, and I'm wearing it to symbolize what is Blake saying? I'm wearing it to symbolize.
You look good. You look very good.
Thanks, Blake. I'm feeling quite trim. Yeah, so I wear this because they're the shape of the zero, and whenever we talk about altcoins is generally the reason, or blockchain, or distributed ledger tech, or
that's irresponsible hyperbole.
Yeah, anytime we talk, you're too soft, brah. So anytime we talk about that stuff, I try to put on the donut shirt to symbolize the zero intrinsic value. Well, I don't believe in intrinsic value. Zero utility in these many subjects that we can sometimes talk about in the crypto space. Ethereum. First, I'd like to address a couple of things that came up in your guys' discussion just now. Firstly, decentralized smart contracts. Tone and I have had this discussion before. We disagree on the potential for the future for these for this general technology concept of decentralized smart contracts. It is true that right now it's very limited, scope. It's a very limited target demographic. It's not very well understood. In addition, there are no really functioning systems that are working really well and that are robust for the future. But looking at Rootstock as possibly the winner, it looks to me like they may be able to pull off what Ethereum bungled so badly, which I know it's a little early to call that for some people, but I'll talk about that in a minute. But the potential for decentralized smart contracts is absolutely enormous. The way that Ethereum did it, I completely disagree with. I was, to be honest, I have not been an Ethereum naysayer from the beginning. I was looking at the project and very much withholding any opinion. I was questioning the value and benefit of embedding said smart contracts directly into the blockchain, for the obvious reasons, which are what are the actual substantive benefits and what are the risks? Well, the substantive benefits question, I actually went on the Ethereum subreddit one time and asked them, and they came up with some like relatively nebulous but believable kind of benefits that maybe you could have, but they really did not persuade me that it was like an absolute must to place all of this computational scripting directly into an immutable blockchain. It didn't really persuade me, but the thing that did eventually, of course, was the enormous increase in attack surface that embedding the smart contracts directly in the blockchain did. And I definitely was not even close to the first one calling that out. Bitcoin core developers like Peter Todd have been talking about that since the start. You guys are introducing a massive risk target, by putting this Turing complete. Your advertising materials are boasting Turing completeness when that's precisely the thing that is dooming you. So I disagree with Tone very much that about the potential of decentralized smart contracts and the structures that they will spawn, functional distributed autonomous organizations. And what most, in my opinion, of the smart contract technology potential consists of is bots. In other words, computer software transacting with each other. That's where the smart contract infrastructure is going to be absolutely huge. People are trying to use it to replace legal contracts and legal structures, and that's completely misguided, and I think that's what you're more referring to, which I completely agree with. When you're talking about anything that has provable digital signatures, provable digital assets, tokens like Bitcoin, where they're very well supported and you can they have a high degree of trust behind them, like if you had a decentralized oracle for bringing in external data to inform smart contract functionality, that's where you have this completely automated paradigm where you have automated data sources that are trusted, and automated smart contracts that are based on top of them. Not a contract. It's not placing the contract with your digital agency to build your website on a blockchain. That is bullshit. You can just freaking scan your contract as an image, hash it, and put it in the blockchain. If you want to if you want to use it as a notary, you don't need logic in the blockchain to do that. But I do think there's a huge potential there. And as I was saying in the chat to Ashraf, the 20s are going to be the big smart contract decade. We're going to see all that level 3 crypto coming out, living on top of these trusted of the trusted blockchain, which so far I've only really seen one.
Because really, smart contracts kind of are level 3, right? Because you have level 1, which is of course the immutable blockchain. Then level 2 would be some kind of Lightning or programming layer above it, and then layer 3 is what actually messes with smart contracts. And if you can, Gabe, before we go to and if you can, Gabriel, before we go to Blake, can you define a smart contract for us and the audience? We got some people in the chat asking.
Blake?
No, I asked you, Gabriel, before we.
I thought Blake was going to jump in, because I mean he's the cryptographic economist.
I can have Blake do it too. Blake, if you want to.
Yeah.
First of all, thanks for joining us, Blake. Blake just joined in, Blake Anderson. So thanks for thanks for joining us, Blake. If you want to, can you please either you or Gabriel define what a smart contract is for the audience?
A smart contract is something that doesn't exist as of yet in any kind of a useful way. The theory is very interesting, but a smart contract would be a contract that would be admissible or executable or in some way mechanical in ways that are not just in service through paper and physical bodies, but that would actually be able to have some kind of a decentralized, meaningful oracle that would be a brick shithouse in predicting an event in one way or another, and then being able to service something. Does that exist yet? No, I mean not even close. And when people talk about Ethereum, I mean it's funny. I consult with various different companies that do blockchain technologies, and I mean if it's not some kind of a color coin technology that is already ready to take advantage of segregated witness advances, it's not something that's competitive. So when people talk about, Ethereum is going to launch all kinds of new technology, like hopefully it does, and hopefully that's good, in terms of a learning process. But having a non-live, non-token operating as such system being sold as such, it's just so horrifying to me that it gave me cancer, and now I'm dealing with cancer. So that's why I'm not on so much, because of the cancer.
Hey Blake,
the Ethereum cancer.
Blake. Yeah, Ethereum cancer. Yeah,
the Ether cancer.
Hey Blake, in your definition of a smart contract, you specifically mentioned decentralized, but is that an inherent property of a smart contract? Because I don't think it is. I think they're completely independent of each other.
It would depend on the jurisdiction area. Like if the jurisdiction is like infinite or like galaxy, blah blah blah. Like if there's objective different signals and triggers that can happen through computer science, then yeah, decentralized would be optimal as far as like the best kind. But you're right, like we need to have some kind of court, some kind of a jurisdiction, some kind of an arbiter at this point, because we don't have brick shithouse oracles that can decide things on the type of scale that we're talking about. So would decentralized make sense? No, not really. I mean, and then at that point, it's kind of a permission ledger, right?
Yeah,
right.
At this point, sorry, go ahead, Tom.
No, I was going to say yes. So you agree we can have smart contracts that are not decentralized, and they can compete against decentralized smart contracts with the same result.
Yeah, I mean, it's all technology that needs to be developed, absolutely. And I want to have the most individualistic viewpoint possible, but I also have to be realistic and say that, the technology needs to proceed in such a way that useful things are explored before non-useful things, even if ideology would suggest otherwise.
Yeah, and you also agree that neither one of those types of smart contracts should require an inherent token, right? Because to me, Ethereum having a token that's both speculative and gas is like Netflix forcing its users to go buy Netflix stock and then using Netflix stock as gas to pay to watch the shows.
Even in the comments, we have a great example. Metabolo is saying bit switch, and I mean people that are coming up with individualistic interpretations of, okay, how can this technology be used to do different things that maybe can be done without somebody coming in and saying, oh, I'm going to bring in a whole bunch of venture capital and we're going to try to control the rails here in terms of this or that. I think that that's a good direction to come from, and permission ledgers I think are just so antithetical to that it's really, really, really hard to mediate that in any kind of a real meaningful way.
Yeah, no, I also tried explaining that to people. It's like, just think about the token. Just I would even talk to the Ethereum people. I'm like, what is your token? Is it gas? Is it speculation? And store of value, or is it literally a stock in Ethereum? And
some kind of a warped permission
Right. And
Ex-
and no matter what answer they give me, I'm gonna say, yeah, but if the majority of the people holding it don't agree with your view on what it is, then it's not what you think it is, even though you're the developer.
Okay, so I got a couple
I mean,
points.
that's true. That has weight.
Yeah. So I got a couple points. So basically, as somebody I can't pronounce his name. Somebody said in the chat. Basically, you can really say that Bitcoin has a smart contract with the check lock verify. Because really at the end of the day, a smart contract is just code agreeing with other code with no middleman, right? So I do believe in what Gabriel says, that we're going to have smart contracts that allow for autonomous organizations and autonomous working of code and autonomous transfer of value. That's definitely coming down the pipe, but we're talking years away. I mean, first, I believe before that could ever actually take off or be big, I mean, Bitcoin would have to be the world reserve currency. I mean, we would have to trust currency at that, digital currency like Bitcoin at that point with our life, essentially. Like that's just like how we trust centralized bodies now. And so that's definitely a few years off. And for Ethereum to come out and say that they figured that out, especially on their the network such as it is, it's just completely disingenuous in my opinion. And the price, I think, is finally starting to reflect that. Now, another point that we've made before is that really there's no underlying economy yet of Ethereum. Like we've been saying, it's so early. It's just so early for this type of thing that the entire market cap is pure speculation at this point. So it can definitely go down for a while until maybe it reaches parity and then goes with Ethereum Classic and then go below that. So because there's absolutely nothing to prop it up, it's just too early. Now, is it worth something? Will they figure out how to scale? Maybe we don't know the answers to those questions. Maybe they will one day, and maybe it'll be awesome. But right now, how it works, running everybody's code everywhere at once at the same time, is not going to scale. And that's what I keep trying to tell people on comments and keep trying to tell people, on Twitter, that is the fundamental issues with Ethereum will not allow it to scale because of fundamentally how it's actually built and designed. Now, Peter Todd pointed this out and a couple other people pointed it out. And so, they're going to they're going to try different things like sharding and things like that, and which we can expect maybe by 2018, maybe. But I mean, this is just such early days. And I just want to make that clear. And before we move on, I actually want to I want to make a couple of these points and kind of throw it out through the panel. So first, we'll go.
Wait a second here, Vortex. I actually didn't get to finish my spiel.
Oh,
I wanted, if that's
sorry.
okay.
Please.
I kind of wanted to address Tone's mentioning of the Ethereum Classic chain. As much as I supported Ethereum Classic's desire to keep the original ledger and the original history of Ethereum and not allow a centralized bailout, I did respect that. But Ethereum Classic has all the same technical debt, all the same design flaws, that it's vulnerable to the same attacks. It's got for now the same attack surface. Even if they don't go proof of stake, which seems pretty clear now, they are against proof of stake for their chain. As you mentioned, the scaling issue is far more serious than with Bitcoin. Bitcoin has a lot of time to figure it out. Ethereum and Ethereum Classic have almost no time to figure it out. It's an extremely serious issue where keeping the proof of work chain will create a blockchain of terabytes in size, quite quickly. I believe in a year's time, something like beginning of 2018, you're already going to be at a terabyte.
It's already surpassed the Bitcoin blockchain size, I believe.
Right. So they're going to be going above 100 gigabytes soon. There aren't any widely used, that's even before any widely used, functioning systems that actually are using Ethereum for important contracts and such. I mean, maybe people are using them and just not, they're using them more privately.
I use Ethereum for my gardening.
Right. You use them for your gardening, you use them for your
no, nobody has ever said that.
Your stamp collection or whatever, but I don't see any large systems even using it, and they're already bigger than the Bitcoin blockchain, which has been servicing actual economic activity for 5 years or so. So the future doesn't look that bright for Ethereum Classic either, as much as I support their desire to keep the original chain. Regarding the price, I am reasonably certain that large holders of Ethereum had been supporting the price at something around 10, because I was thinking this thing has got to drop well below 10. Once I already thought it was going to drop below 10 before the DAO. Once the DAO cracked and they decided to fork, I thought we've got to come below it. And I'm pretty sure that the price was being supported and they were gobbling up people's ether in order to support the price and allow some more projects to go forward, some talks with fintech companies, some talks with banks, governments, whoever they're trying to get to pay them to create projects on this platform, this open source platform. They were trying to get some contracts in the door, maybe keep the price floating. It's still not that low. I'd like to point out 775 is not too bad yet, but it looks as if the floor has dropped out. So I'm really, really bearish on the price.
Yeah, no, Gabriel, I agree with everything you just said about Ethereum Classic. There's nothing there for me to disagree with. And the one thing just came into my head. Go ahead, Blake.
It's going to the moon, dude.
Another thing that just popped into my head, what's going to happen to Consensus? The Joe Lubin's little side venture that builds applications on top of Ethereum. I thought it was literally insane for Consensus to have 75 employees. I was just at an event and I spoken to some of the Consensus people. No, Gabe.
I'm shocked.
Gabe, don't be shocked. 75 employees was earlier this year. They are now closer to 150.
Yeah.
Yes.
What? They're
Yes.
ramping up from 75?
Yes.
God damn.
Yes. They are now from what I hear, and they're even hiring interns. I was talking to a girl who's literally.
Well, hey, interns are great because they're cheap.
I love interns.
They're cheap. They're cheap, but her college is giving her like college credit working for this scam. It's getting really out of control.
I need the contact information of this educational institution in quotation marks.
So what is, I know I talked a little bit with Vinay Gupta on my show about Consensus, but just slightly. Aren't they researching governance technology?
Dude, when you have 150 people at a startup that doesn't make any revenue, nobody knows what the hell they're doing.
Everybody's getting raped, first of all.
I spent 10 years on Wall Street working for a company. The biggest that ever got was like 90 people. 10 years. We were making like $11 million a year in revenue. Not in revenue, sorry.
I'm talking about financial
revenue.
But at the same time, there's no reason to have that much time and effort sunk into something that's not going to return. That's a crime. Anyway, wasted resources anyway.
I just want to show my chart real quick. I tweeted this out yesterday. I'm such an idiot. I couldn't wait one more day. The price would have fallen down to like 660. Would have been a much nicer looking chart. But if you look at my screen, you'll basically see that the price of Ethereum in terms of Bitcoin is now below the opening. See, this is what's weird. Ethereum sold this crap token like a year before it existed. So a year later, when it came onto the market, right now the price of Ethereum in terms of Bitcoin is lower than it was on the day that it was actually tradable. But
damn,
it still needs to get in dollar terms to the price, and I think it's like around $2 or something like that, like $1.50, $2. So that's the blue line that I have. So once the green price line crosses below that blue line, which is the opening price of Ethereum, as we say, the ship be sinking,
Then
and this is something I tweeted out earlier today.
Then we can say objectively, without price horizon reservations, that this is dog shit.
Right, and I tweeted out one more interesting chart. This was a few days
Tone.
ago.
Tone, what is the train
Yeah.
saying? I can't see it. What does the train say?
Oh, you can't read that?
Stop asking. Can you read it out?
Oh, stop asking about hard forks, price drops, and proof of stake implementation. It's all under control.
That's
Nice.
So I tweeted out this chart. So what I did was, this took me all freaking day. Well, not just these four. I tweeted out like way more than this, but these are all. There's only been there's only been 3 coins besides Bitcoin that made it to the $1 billion market cap level. Ethereum is the biggest one, and this was tweeted out when Ethereum was still $10, and I literally said everything that's ever made it over $1 billion in market cap eventually, completely imploded. This is Litecoin, this is Ripple, that didn't quite make it to $1 billion, but it came close. And this is my favorite coin of all time, Aurora coin. It hit a $1 billion market cap like a week or two after it launched. And then this is what happened after.
To the moon, right? It went to the moon, right?
Right. And then if you look at my Twitter, tweeted out 9 additional coins, all of whom made it to the $100 million market cap, and that includes the DAO. And Ethereum Classic made it to $100 million market cap, and Steemit was actually the biggest of all of them. And of course, my second favorite coin of all time, Paycoin. And there has only been one altcoin in all of crypto history that had a second pump, and that coin is Dash. So Dash had an initial pump. Usually after this pump, everything collapses. Dash is the only one that had a second pump that was bigger than the first pump.
It's all thanks to Amanda B.
Yeah, they got that lady.
It's all thanks to Amanda.
Are you sure it's not just the name change? Because it used to be called something else. I mean, they changed the name.
It was Dark Coin.
Suck in a bunch of new
She's a
people.
pretty lady.
Oh, maybe Ethereum should rebrand and do a
I
name
still
change.
watch those videos. I don't like.
Yeah, it's funny. I literally asked Amanda like 1 or 2 questions on Twitter, and she blocked me.
Did she? Oh my God, that's terrible.
It should be called.
I grilled the hell out of her live on David Seaman. She didn't block me. I was still like, who's that lady?
Damn, it's probably because you look better than I do, Blake. I'm just too ugly.
I don't know what that. I don't know. I don't know.
The new name for Ether should be
I just
chloroform.
wasn't important enough to remember.
Once Ether drops below $1, it can be called chloroform because you just pass it out.
Nice. Yeah, no, yeah. See, it's just kind of ridiculous that you remember how long it took Bitcoin to get to $1 parity, right? It's just kind of ridiculous that that the market is saying that Ethereum is literally worth 7 times the US dollar. It's just kind of ridiculous, right? This tiny little economy with this tiny little coin with no economy, saying to be worth 7 times what the US dollar.
I don't know what you're talking about. I would gladly pay 700% of my hard-earned dollar for a beta alpha token system that doesn't function properly. I mean, why wouldn't I? I mean, this is
Well, I don't think that's necessarily a point. I think it's more the market cap as Tone has charted out. It's really the market cap. If there was only 3 Ether outstanding, you could say, well, yeah, you know what, that system's worth $23. But since there are millions, you're looking at whatever, $600 million. You say, well, geez, is that ecosystem worth $600 million? If you base it on all the labor that went into the various projects by hour, maybe it's worth something in the millions. But if you judge it on utility, very questionable.
Yeah, true. Okay, so I think we can move on to the next topic.
Objectively, scientifically valuable.
Exactly. If anybody else has any
Yeah.
topics, or if anybody else has any thing to say on this topic, let me know. Otherwise, we can move on.
What is the topic? Just for
Sure.
for
Yeah.
clarity purposes.
Basically, this topic was just talking about Ethereum's recent 9-month low in dollars, and then its recent few months of downward spiral compared against Bitcoin.
I just wanted to like one more point. I mean, there's a bigger risk in cryptocurrency than in any other investment. Let's talk about this. This never gets talked about. There's a bigger risk in crypto than any other investment, and that is in some cryptocurrencies, there's a risk of systemic failure, of the entire system coming down and failing. Now, is that a super large risk of Ethereum? No, I mean, the software is getting overblown to the point where it's hard to, like, spin up the chain and to publish a proof of, hello world, but there's not the systemic risk. But there is systemic risk in the failure of some of these chains, and that does not get addressed enough. And systemic failure needs to be risk managed against.
All, not some, all.
Yeah, exactly. All chains, including the Bitcoin blockchain. And the Bitcoin blockchain has value and retains value because it is the most robustly resistant against failure. And when people forget this, they lose money. And I guess that's what should be, like, if people are like, oh, you're ripping on Ethereum. It's not that we're trying to rip on Ethereum. It's we're trying to drive home the point that if you do not have a robustly vibrant blockchain, the risk of systemic failure becomes a real issue. And not even just the risk of systemic failure today, but of tomorrow, of next week, of 10 years from now, of 5 years from now. And the one with the best odds in terms of all of the extra information taken into account is Bitcoin for right now. That's why it does well.
Exactly. I say this a few times that we've been very critical of Ethereum, but there's a reason for this. It's not just, we're not just sitting here ripping on Ethereum. We do this so that we can try to help people and try to warn people, because there's so much misinformation out there. This stuff is not easy to understand, and especially when you have people like Vitalik out there and all of these investors, and then you got Microsoft and you got Coinbase backing Ethereum, and all of these companies who are just clearly for profit, clearly don't understand the underlying technology. When they're all out there saying that this is the best stuff, there's got to be someone out there who can tell the truth. And that's always really been, for my opinion, people on the World Crypto Network. Mad Bitcoins and the Bitcoin group, you guys have been critical of Ethereum as well, and we've been critical of Ethereum since the beginning. It's not that we hate it, it's not that we don't like it. We are just completely critical of it because to us it hasn't proved viable, it hasn't proved its worth, it hasn't proved its market cap, and there's just so much pain that's going to happen over the next few months as Ethereum continues to decline, and we're just trying to minimize that at the most, because there's a big misunderstanding of how the underlying, really how Ethereum works underlying. I mean, just running all the code at once everywhere. I mean, that's just, we want a world computer, but that's just kind of ridiculous, right?
No, I love it. I love Ethereum. Ethereum is like when Hunter Thompson goes to Vegas and he's on like Ether and he's stumbling through the turnstile. He's like having an amazing time on all kinds of stuff. Like, as far as academic research, yes, let's do that. Let's have the entire hallucinogenic concoction. But in terms of material wealth transfer, oh wow, you gotta pump the brakes on that for just a minute, because that's the oil and water do not mix.
Yeah, I could. This the turnstile scene where they're on Ether trying to get through a turnstile, and it's just not pretty. That reminds me of Ether trying to fend off all the hard forks.
I love it. And each hard fork is like when Hunter Thompson has to kick his lawyer off of the turnstile. He's like, oh, you fell. Oh, fucking A. Like, okay, well, now we can finally get up and get on our way because you finally fell off of the carousel, and now we can do whatever. Like, the hard fork is every time he has to betray the trust of his attorney and kick him off of the turnstile.
It just seems that people don't understand. It seems that people don't understand that when you do a hard fork, you kind of reset the system. You literally reset the attack vectors, and now there can be new attack vectors that there couldn't be in the previous system. Every time you fork, you completely go back to zero. And people don't understand that, because what they're saying, with Ethereum is that, it's strengthening the system, it's hardening the system, right? With all of these forks and all of these problems, they're like, bring it on, right? They had an update called "Bring it on, bro," right? Like, come at me, bro. They don't seem to understand that it's not going to be fixed because of the way it works. But maybe Blake, you can comment on that.
Well, yeah, I mean,
Can't
hard
seem to
forks,
get it across.
well, it's a complex issue, hard forks, because there's two camps. One camp is like, okay, once you have enough soft forks, a soft fork is like a hack to any various different software system in terms of like, you've hacked it to be able to do different things that wasn't intended to do before. That's all cool and great, but now you have different attack vectors and you have different memory leaks and vulnerabilities and all kinds of shit that makes it like just not as stable as you would want. And then you have hard forks, which is like, okay, well, you're going to take the base system back and actually program in some stuff a little bit tighter as far as being able to do stuff a little bit better. This is going to be really harsh, but hard forks in terms of people that aren't perfectly competent in terms of implementing those hard forks are really, really, really tough to manage. And it's not that I'm trying to be hard on any specific individuals to be like, you as a specific individual are not competent enough to do A, B, and C. Like, I'm not either. Like these are new technologies that are material and wealth value transfer systems that are operating live outside of beta or alpha, and they're live iterations and stuff like that. And that's a hard horsey to tackle, and to make sure that if you're going to, do hard fork changes, that you have the base infrastructure completely, lined up and everything else, so that there's not going to be any type of possible malfeasance or memory leak or stability complications or compromises. And so it's just it's good to see a clean hard fork and consensus, I guess, but at the same time, what it takes to get that, it is almost kind of evidence of a non-immutable chain. So it's it's kind of an Ouroboros, like self-defeating, like tightening cycle.
Yeah,
I'm kind of like, oh, we did it, but that's not exactly the best.
But Blake, but also has there ever been a successful hard fork that wasn't an obvious bug caused by Mike Hearn?
Exactly. That's what I'm saying. I was just about to comment on that, because basically, I remember when Ethereum. I remember when the Ethereum people kept on bringing up. Well, yeah, Blake. Here, I want you to comment on this, because I remember when Ethereum people kept saying. Dude, they just kept on saying that Ethereum or that Bitcoin has forked before too. So this fork is not bad, and they just kept using that over and over again. That Bitcoin forked too, so we can fork too. But when you're having all of these forks, I mean, they did a double fork a couple weeks ago, like 2 forks. How many forks will it take before you understand that there's not many forks you can do left and still salvage this system? You just can't at this point. It's the trust has been completely eroded. But
well, I mean, like when a human being dies nowadays, there's not that many causes of death. Like your lungs stop, or your brain hemorrhages, or your heart stops. Like there's certain different scenarios in which a chain completely fails, and one of those failures is a systemic or a cascading fork operation, where there's fork after fork after fork after fork, where people just lose. Like that's a really bad situation. So the faster that a chain can fork, even in terms of things that are positive, it's not always the best indicator to be like, oh, well, we forked really fast in terms of this thing that we needed to fork. And risk management and doing things at the right pace is just so important, that I know I sound like a wet blanket in terms of being like, oh, don't update things when you know they need to be changed. But you really don't want to, in terms of a material wealth transfer medium like Bitcoin. You do not want to be forking it and updating it unless you have absolute consensus. And in terms of the permission ledger that is Ether, that's you have to look at the objective facts.
They still claim to be public, though, Blake. Right? They still.
I know.
Claim to be
Yeah.
public.
I mean, and when they claim that they cannot do certain things, then certain things happen really quickly, and or there's still certain rights that have been retained by a certain central authority. When you have to look at that as is that honesty or not? And when Charles Hoskins said, I've left the team, and why have I left the team? Because they are great and intelligent individuals, but I would not trust them with a single dollar of my grandmother's money if she was on a pension, or whatever it was that he said. Charles Hoskins is not, in my opinion, somebody that would lie about something like that, or
Oh yeah. So sorry. I know we want to move on to another topic, but you just reminded me of something. So I've been tweeting out,
Yes.
this picture of all of the initial members of the team that kind of started Ethereum, and all their titles, and Steven Tual's there as a communications officer.
Good old Stevie boy.
And then there is 8 co-founders, founders of Ethereum, and then some say Stephen Tual should have been one of the founders, but then on that specific chart, he wasn't. I know Eric Lombroso even reached out to me because he's on that list.
Wasn't Tual pushed almost all the way out at one point though, before he came back with the
I don't know. But here's the thing, right? So there was a lot of names on that list, including what's his name, Paul Snow of Factum, and like the members. And I've been critical of all of them. Not so much Eric Lombroso. I've been just saying, why were you programming for them? But a lot of them reached out to me, and they're like, they find it, I guess they're being bothered by the fact that people are associating them with Ethereum, even though they left the project very, very like early, but maybe not early enough. But here's my problem with it, right? It's one thing you leave this project and then kind of say privately. It's another thing leaving the project and being very vocal about the scam of this project as you're leaving, and none of them did that, right? So that means I don't care. I don't give a shit, right? Like, as far as I know, 11 million Ethereum were printed for the Ethereum insiders. If you later come to me and say, I didn't take that Ethereum, my answer to you is, I don't give a shit. You know what? You should have been public, calling this project out as a scam, like I was, taking all the shitstorm that was coming at me. And you know what? And if more of you would have come out 2.5 years ago saying what a disaster this was,
it's true.
Maybe we wouldn't be so hard on you today.
Exactly.
Even though you left the project in the very early days.
Well said, Tone. Well said. And not just him, but the Ethereum audience in general. We wouldn't have been so hard, you know, if just on you, if you would have just come out and said, like, look, this is you know, this is the fundamentals of it. Just come out and admitted to what we've been saying. But of course they won't. It's still a public, immutable, code is law, Vitalik knows better kind of thing. So we just continue we'll continue to warn people until they freaking come out and admit that they're either, you know, a scam or they're being less than honest with people. So, I mean, especially when you got companies like Microsoft, Samsung, IBM getting behind Ethereum, you know, and putting their name behind Ethereum, various projects like that. We have to get the word out to tell people. So that's
are they still working together? Or is it like R3 Sev where many bridges have been burned?
Sorry, say it again, Blake.
Have you guys read these articles where the R3 Sev relationships with a lot of these big banks have not been working out, and the IBM...
three banks. Are you talking about the 3 banks that left R3?
Yeah. And then I think I don't want to quote it directly because I don't want to misquote, but I thought that IBM was abandoning their Ethereum angle on the Internet of Things research.
Though they very well may have. I'm not sure on that. I know
come
that they
unprepared
did say something
now,
at some
so now I've embarrassed the integrity of the show.
No problem. It could very well be. And you know, obviously we don't claim
Damn
to be.
Damn it, Tone! Why haven't
experts.
You come with my notes?
We don't claim to be experts, man. We just claim to be enthusiasts. So, you know, if we get a few of the details wrong, you know, sorry, but we get the important stuff right at the end of the day. We try to.
I thought I had it somewhere near me, but I've been looking around this whole time. We've been buying time, and I can't find it. So perhaps in another edition.
We'll check it out. Like, we did cover that last show, but we are the bank's leaving. But this show we are going to talk about R3, which is going to be our next topic. And what I kind of wanted to bring up basically is the fact that they open sourced Corda. Their project, let's just call it their Mike Hearn project, right? Because he wrote 95% of it. So let's just call it the Mike Hearn Corda, or the Mike Hearn project that R3 released. And I wanted to get everybody's opinion, and I wanted to go to you, Blake, first on this. What do you think about the fact that they open sourced it? What do you think about the quality of the code and the viability of it? Go ahead.
I'm gonna toss to Tone here really quick. I gotta take care of something here, IRL, and I'll jump right back.
No problem. Tone, go ahead if you like.
I'm on, right? Remind me.
Yes,
okay,
sir.
I'm on. Okay, well, I did look at the code, and if I did look at the code, it would probably look like gibberish to me at this point. That's how long it's been since I looked at code. But here's what I can tell you without looking at the code. It's not a blockchain. That's it. The discussion ends. Look, it's not a blockchain. The reason why I've been critical about R3 is because they wouldn't admit they weren't a blockchain. And now they are coming to the realization that they are not a blockchain. And I saw a recent presentation from R3, and I specifically asked them, I get my question in, and I specifically asked them, will there be any components of proof of work, or will you be utilizing any proof of work chains in Corda? And the answer was no. So that's it.
They're calling themselves a distributed ledger tech now, right? I think. I don't even think they're calling themselves a blockchain anymore. They're calling themselves a DLT.
They are, correct. So if they move over to that side and they, specifically start saying that they are not a blockchain, I will leave them alone. Right? Until then, I will continue to be critical. It was nice to finally be quoted in CoinDesk. I think I've been quoted everywhere else in the crypto space other than CoinDesk until this article. So, so thank you for that. That was, I believe, Michael De Castillo wrote that article, and because I ran into him at one of the events where we were talking. And that's it. It's as simple as that. So I was at another event. It was like educating Wall Street, I guess, about blockchains and decentralized ledger technology. And I spent the entire 2 days like explaining to people, you will sit in this room and you will have speakers coming up. And here's what your job is going to be as people trying to learn what a blockchain is. A blockchain, as it's currently being treated and defined by everyone from the Fed down to your barber, okay? A blockchain, it's like imagine a linear line. On one side of this line is the innovation of Bitcoin and proof of work. On the other side of this line is an Excel spreadsheet placed as a Google Doc and given multiple read-write permissions. And it's your job as the audience learning what a blockchain is to figure out where on this line your project sits. And it will sit somewhere in the middle, because almost no one is going to stand up here and tell you why you need to use Bitcoin, and no one is going to stand up there and tell you why you need to put an Excel spreadsheet as a Google Doc and give certain people admin rights to this Google Doc. And to me, what Corda of R3 is a lot closer to that Excel spreadsheet on a Google Doc than it is to the proof of work Bitcoin on the other side of this line. And that's how I see it. I don't know how else to explain it. It's great that they got a bunch of bankers in a room, and maybe they will simplify their back office, and we can do, settlement in T+1, T+2, not that it really matters. That would be good. It would be nice, not to have to pay over $1,000 to do a title search, for a third-party company to prove that you own your house. But these things don't require decentralization, and they don't require mining, and they don't require proof of work. They just require competent database developers and cooperation from both private industry and regulators. This can all be done with 1990s technology like email was. So as long as I see efforts from R3, explaining to people that they're closer to this Google Doc than they are to a blockchain, I'm okay with it. Then they won't bother me so much.
Yeah, I think I agree with that too. If Ethereum stopped calling themselves a blockchain, that would be really nice. That would really make my day. But as long as I'll take R3 for sure. If they stop calling themselves a blockchain, that would actually be nice too. But let's move to Gabriel. What do you think about this crazy open sourced Corda code, Gabriel?
What I think is I want to talk about Bitcoin. I decentralized. So I'm looking at the GitHub right now, Corda. Decentralized. distributed ledger platform, decentralized. It says here. Corda is a decentralized database system in which nodes trust each other as little as possible. So
It's not good enough for me. That's hog shit.
yeah, I was going to say as little as possible means that they still got to trust each other, in which case, how is it decentralized? Well, I guess decentralized, it's not decentralized, it just has more than one center, maybe you could say. I don't
That's
know.
distributed. It's distributed.
Yeah,
it's not
it
decentralized.
seems like it is distributed, but decentralized seems like a misleading term in this setting.
So I had to come back with some oomph.
Say again?
I just had to come back with some oomph. I wasn't really aware of what I was saying.
We didn't even know you were gone. So let's see here. The peer-to-peer decentralized database. If you don't, as Peter Todd pointed out in the article, and I love how they quoted Tone here, getting all the banks in a room and discussing a shared database is, I guess, impressive. I love that's a fantastic quote. It's genius.
I had to laugh when I first read that. That
so
actually
good.
made me laugh out loud in IRL.
Very funny. But yeah, so I mean, yeah, it's cool. You know, they're trying to save banks money. Fucking fuck you. Why aren't you working on real things that can save regular people money instead of the people that have been squatting on those monetary and fiscal regulatory structures for fucking centuries, dude? Fuck you. Anyways, so fuck you is basically my thought here. I don't really care at all about this bullshit project that probably won't get off the ground at all and is actually just a way to draw off money from banks to make yourself, at least to get by, or maybe get rich if you possibly can. But even if it does, saving banks 7% or 1.2% or even 11% or 0.6% on their day-to-day tasks is of zero interest to me. They're not going to pass on that savings to the customers, I guarantee you. So this is just a way for more bullshit artists to get more, to draw off more wealth from culture at large. So basically my response to R3 is fuck you. You are useless toads.
Well,
and basically
Jesus.
boils on the ass of humanity. So go home, rethink your life, play with your kids, talk to your wife, make some dinner for yourself, and do something useful with your life.
Just tell us how you really think.
Yeah, exactly.
All right.
You are more harsh than I am.
Yeah. I got a few points myself, but I'll let Blake comment here on what do you think of the release of the source code? Like, what do you think of it, like in general, and then what do you think it means for R3?
Well, it's kind of like if you went to like the Outback and do it like I need a babysitter, and it's like he's a dingo. A dingo can watch your baby. You want to do some open source development to some technology that'll empower the people. Why don't you donate some time to R3? And it's like what there's this differentiation that techno philosophers make, and the techno philosophers like to talk about two things. Are we going to be, Icarus and fly too close to the sun and melt our, wax wings? Or are we going to be Prometheus and go get the fire and bring it back from the gods? And that line is kind of being straddled for like, are we going to have individualism and technologies which empower individualism, or are we going to have technologically empowered collectivism and hell? So I think that if you understand that paradigm at all, or like that balance, you probably don't want to be like, oh, this open source work that needs to be done for all three. Let's go and donate some time there. Not that I don't think that there's going to be a whole lot of spark that really anybody could even offer to a permissioned ledger. But even at the same time, like if you're genius enough to offer the spark of true power to a permissioned ledger that belongs to a bank, please don't do that. Go ahead.
That's hilarious. It's such that is a great point. Such a good point, Blake. Open sourcing this is an obvious marketing move. It's a freaking gimmick. Open sourcing this is you open source. Yeah, you open source code to try to get some, a different demographic to look at it. You open source code in order to induce some trust. If you are not in the R3 SEV banking consortium, then you don't need to see this code. There's absolutely no reason to open source it. They're not going to get anybody donating their time to a banking consortium. That's fucking ridiculously backward. So this is just a marketing gimmick. They could totally.
Oh, sweetheart, I was going to donate some money to the orphans, but the banking consortium needs some time, so I'm going to go ahead and buy some Cheetos instead. And then
exactly.
The banking consortium, and fuck the orphans, they can starve to death and wherever they are.
Yeah, and but it is a good idea because then it allows public people to look at it. But because it's so useless for anybody but people sitting on top, companies sitting on top of a giant regulatory structure that is keeps out as a gatekeeper and keeps out competition, then it's of totally no use. This is just basically empty. And this is another reason I wore my donut shirt, because there's zero useful anything behind this project.
Yeah, guys, I also don't see any reason why they would open source this and why they would, show it to the world, other than, maybe Mike Hearn wants to prove that he's actually a competent developer in some way, and maybe he can get another job after this. I don't know. I just see
another great explanation.
Oh,
reasonable explanation.
Shabow.
I just have no idea what the point of open sourcing it was. I'm sorry, I just don't. And my advice to banks or any financial institutions that haven't yet joined this consortium, why? Don't. Just wait. Look, you have like a dozen of these DLTs, private blockchains, from Symbian to Eris to Hyperledger to R3 to Chain to God knows what else. I don't even know. Just sit back and wait. If one of these rises to the top and it gets everybody on their platform, moving messages around, no one's going to stop you from joining it later on. I mean, why waste the money? Why join this thing? And also, here's the funniest part. You're going to love this. You're going to love it. So during the R3 presentation, they put up this chart on the board, and it's like an interconnected web of all the banks. I'm sure they had removed, Goldman Sachs and Santander like the day before, because this presentation was just a few days ago. And then someone asked a really good question. Like, so you're working with, 40 banks. How do you coordinate this? What kind of people from these banks are on these blockchain teams from the bank? And this is the greatest answer ever. The guy goes, well, it's pretty much whoever at the bank is interested and wants to be on the team.
Because it's like barely nobody. Like, it's like one secretary that they have a phone number for, that they can call up and be like, yeah, guess what, your funds are due, your subscription to the R3 consortium is due, we need your money.
Dude, when did this become the shitlord network?
No. Well, that's the thing. And you're sitting there going, well, if I was a bank and I was really interested, there would really only be 3 people on the team, and they would all, and at least one of them needs to know how to develop a database, and the other 2 need to know how to query a database. And the other people would be your compliance team, like the back office or whoever's in charge of, removing their own job. You need the right people on these teams that try to understand this stuff. You can't...
Dude, all you need is a growth hacker.
Right. And R3 needs to take initiative here and provide guidance to these banks of who needs to be on this damn banking team. And if they're smart, I don't know if they're maybe they shouldn't be, actually, because then the last thing R3 would want is a database developer to be on this team, or the CTO, and he's gonna go, what the hell? Which is why I think Goldman Sachs left. And here's the interesting part, right? So Goldman Sachs leaves, Santander leaves as well, and I think they were like some of the original banks that joined that made all those headlines. And I was making a joke. I'm like, well, I guess Goldman Sachs figured out they have the better database developers to put an Excel spreadsheet on a Google Doc. But then someone told me, he's like, I bet you that Goldman Sachs didn't lose any money. I bet Goldman Sachs had like a free entry to this group as one of the first banks in order to get everybody on board. And I didn't say anything right there, but then I thought about it. I'm like, you know what? If that's true, if that's provably true, and Goldman Sachs has now left, shouldn't the other banks have like a legit lawsuit against Goldman Sachs?
Yeah. Interesting.
Oh, I can't wait to see the
not,
continuation of this story. No more stories about useless open sourcing of useless software, and then we see what really this was about, which is giant lawsuits and mudflinging back and forth. I would not be surprised at all.
I don't know if they have a lawsuit against Goldman Sachs. I think that they definitely would have reason to leave the consortium or leave whatever kind of agreement they have, or try to get any kind of contract attorney that they have working for them to argue a violation or breach of mutual assent. Mutual assent refers to the meeting of the minds, or people understanding what a contract is. And if you say that it was my understanding that some of the biggest Fortune 500 banks of all time were on your contract, role, whatever the hell you want to call it, and that not being true that wasn't my understanding. And a court of law with a good enough lawyer, I don't know, they might have to sack up and be ready for some losses, because that might be a doozy of a case to defend.
Indeed. All right, so I got a couple of points here. So basically, I want to remind people that these private blockchains, these distributed ledger technologies, these DLTs, they all require trust. They all require trust, and not just trust, but most of them actually require more trust than the traditional banking systems. Peter Todd had a nice comment on Corda, basically said, not once do the Corda docs talk about who actually is supposed to have access to keys. The whole point of cryptocurrencies is to know who did what, and that's like the basic stuff. And then another thing, that we wanted to say is that there's really no use for this. There's no reason anybody would want to ever be passionate about this. All this is going to do is save the banks a few percent. There's no people that are going to wake up in the morning and be like, how can I help Goldman Sachs? There's nobody that's going to do that. They did mention on the article that somebody made their first constructive actual change, and all it was moving code from one place to another, and basically telling Mike Kern that he didn't know what the hell he was talking about, because there was a couple of bugs that Mike Kern completely said that weren't there, and then the guy corrected him, and it turns out they were. So I mean, there's no use for this. There's going to be no use except for the banks. Hold on. And the other part is like this costs these banks to be a part of this consortium. This costs banks millions of dollars. There's no reason that all these banks are going to stay together. They're all going to leave when they all realize that R3 is vaporware, that Corda is horrible software, and that they can go try to either build something better themselves or use Bitcoin. And so there's just
explain vaporware to our more junior user or viewers.
Yeah, it's just that basically the software has no use. Okay, basically everybody who checked out the software, from what I heard and what I understand, and when I look at it, I completely see this as a test software. This is so much beta. This is every word of the word beta you could ever think of. Like, there is so much stuff that's missing. This is nothing more than a proof of concept. In my opinion, that the release, the source code is literally nothing but a proof of concept, because there is so much basic stuff missing. It's even just getting nodes. I mean, the default is like to get all the nodes at once. It's ridiculous. It's in my opinion. So sorry. Does anybody want to comment? I think Gabriel, you said you had something.
Yeah, just really quickly. Really quickly I wanted to say that I was reading the GitHub page, and it appears that Mike Kern believes that this system of less trust, I don't know what to call it, low trust distributed ledger, he's under the impression that it could be used for more than banking, and that's sort of his excuse for open sourcing it. Good luck with that.
I like how they say that, but then it's like what? They're like, This is a
All
more
right.
serious game. Don't you ask me about what?
So I'm not going to criticize the code because again, I haven't looked at the code, and like I said earlier, even if I look at the code, it's not really going to do anything for me. So I don't know if it's good code or bad code. What I can do is I can kind of defend the banks here because I did work there for a while, and I'm familiar with a bunch of these banks. Their developers are really smart, and I mean really, really smart. I mean, I've met some of the again. I've been in the crypto space long enough to be able to compare developers in this space and the developers that work for the banks. I mean, the guys that get paid, over $100,000 starting salary. Like, I mean, these salaries go 200,000-300,000 deep, easy, and at Goldman they're triple that just for development. They're really good. I mean, these guys really know what they're doing. I mean, our core devs in Bitcoin, I believe, are very, very smart. But these other devs, they're really good. And since I'm on the topic of defending the banks, back when I left the Wall Street world like 2 or 3 years ago, I was also, I'm like, oh, this is like, they're scamming people and they're bad. What I've been seeing in the crypto world the last couple of years, it is magnitudes worse. Magnitudes worse. Like if I go back to Wall Street now, even if I go back to Goldman Sachs, I can I'm going back to honest work from what I've seen, everything in the crypto space. like
it's kind of
this is
sad,
where
but
we are
true.
right now.
Wow.
I mean, we're discounting Bitcoin, of course. If you don't count Bitcoin, if you're just looking at all the other coins, it's almost like she's between the pre-mines and the scams.
Bitcoin. No, wait. Even if you count Bitcoin with all the scams that people are doing to get your Bitcoin.
Yeah, it's true. I mean, there's a lot of freaking scams in crypto, and it's of course, because it's the wild west right now. It's early days, we know, but yeah, right now, I mean, you can definitely tell the difference between a crypto company and you're going back to a bank, and you're like, oh, okay,
Well, I mean, and I don't know. I gotta jump in here for a second because I know exactly what Tone is talking about, and there's been just it's terrible, but at the same time, I have seen some horrible duplicitous shit from the banks. I worked for a bank where they had investment clients where they would tell their super low income, low volume investment clients, invest long term, blah 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 blah, and they would just take all their money and stuff, and they would tell their long term investment clients, like short this and that, and like mix basket against the euro and stuff like that. And so, I would just see that kind of stuff going on, and seeing small time investors getting mail signals on purpose for profit. That bothers me, and I think that's the same thing about alts that bothers you.
Yeah, and of course that's the tip of the iceberg for what the banks do. I guess Tone, we don't get to see the really bad stuff the banks do, right? Like all the drug money laundering and things like that. We don't, at your level, Tone, and at most people's level, when you work at the banks, you don't see that kind of stuff, right? You just kind of see the low level stuff. The really, really, really terrible stuff is what's happening off the books and that you don't see. But yeah, but we know what you're talking about, Tone. We get the point. Yeah, for sure. All right, so I think we can move on to our final topic. We've been kind of going a while here, but we got 52 viewers in the room. We got people in the chat talking. We're having a good time here. So if you guys are down, I think we'll do one last topic. Before we do that, if everybody watching the show could go ahead and tweet out, Facebook out the show, Facebook out the link to the show. Let everybody know we're here talking Bitcoin. We love to get more people viewing, more people live, more people viewing afterwards. We spreading the word of Bitcoin over here. So please tweet and Facebook us out the show. That would be great. We would appreciate it. Let's move on to our final topic here. This one is a good one to have both Blake and Tone on because it's like more finance stuff, because I really wanted to bring this up as a topic. Basically, the Bitcoin loan platform, BitlendingClub, is going to shut down. And they cited reasons for basically the main reason that they cited was increased regulations, more regulations that they had to deal with. They couldn't comment too much further on that, but that's what they said. And so I wanted to get the panel's opinion, and we'll go with Blake first. and then Tone. But first, basically, what I wanted to see is, is lending doomed in Bitcoin, or are we going to finally at some point get a decentralized peer-to-peer lending solution like Bitcoin? Actually, how Bitcoin actually works? Are we going to get a version of that, or is this just never going to happen? And what's your opinion on that, Blake?
Well, I mean, in terms of systems that are going to be tenable and sustainable and defendable in the current environment, we have to look at what's been done and what has worked and what hasn't. In terms of what hasn't worked but almost did, you can look at things like eGold. eGold is actually a big signal as far as what Bitcoin had to do in terms of being able to survive at a certain point. Having the tangible store of value linked somewhere became a huge liability. And in terms of lending, I mean, decentralized oracles and decentralized collection agencies, or some kind of a decentralized or FICO-infused reputation hook that will go through and have your Fair Isaac information or credit score index affected negatively or positively. I mean, that's all to be judged. And even if we were to make something that we're seemingly decentralized, but then hooked into that would give undue massive levels of power to people that have any kind of influence on the programming or a situation behind that at Fair Isaac. So I think we have quite a ways to go in terms of that. Projects like Augur and things that purport to decentralize the job of putting information into an oracle, I think that's exciting academically, but I don't think that specific project is going to make a ton of headway in that direction, which is very disappointing because I, like many other people, are very excited for huge quantum leaps in that direction.
Yeah, I mean, decentralized lending, I mean, it really could be like this explosion thing that like single-handedly almost lifts the world out of poverty. But we do have these cool websites that like BitGive and other websites where you can actually give people small amounts of money, even if it's not Bitcoin. Like, there are still some solutions for people to be able to get money to third world,
but also
to borrow money. But yeah,
in terms of giving, I would also just very, 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 I would strongly implore people, give money where you live, to people in your own community that you see that actually need money and need your help. Please do not skip over those people thinking that you're going to give money to a centralized institution, and they're going to give money to people before they starve to death when they need it. That just doesn't seem realistic to me. So again, just if you're going to give money, please do it in person whenever you can, and then secondarily through charity.
I agree. Your local community. I mean, that's wherever you live. That's where you have to support the most, right? Because that's the people that you help, that the economy that you work in, the place that you live. I mean, I just think that's super important to really support your community and the people who need it around you. Friends, family, and stuff like that, and even by extension, just people who in your community who need it. Because, like you said, Blake, the charity companies at this point are so corrupt and so messed up. I mean, there's a really small chance your money is going to actually go to something useful anyway. So, I second your suggestion on that, Blake. We'll go with Tone on this. What do you think about the BitlendingClub shutting down, Tone?
Okay, I'm not surprised that they're shut down. I'm also not buying their reason that it's because of regulation, right? I mean, again, this is just my speculation. I have never met anyone from that company. I never spoken to them. It's probably true when they said in the article that, the authorities came and the regulators and they talked to them. That's probably true. So there's a couple of things why I'm not buying it. First of all, they're lending Bitcoin. They can just move, right? Like, what the hell is tying them to Bulgaria of all countries, right? Second of all, if they're lending it outside of Bulgaria, how are they enforcing this, right? Because now they got a cross-border regulation. I don't know how they're enforcing this, right? So if their entire platform, I never looked at their platform. If their entire platform was within Bulgaria, then yeah, sure, they got to shut down. But if they were lending outside of Bulgaria, then who cares where they are? And they can just move to a friendlier jurisdiction, or they can just keep moving. They can even maybe move their offices to a cheaper location than Bulgaria, right? If they really,
especially if they were making profit.
Again, right? If they were making profit. So I go back and forth on this. I really need to do more research and more reading and more learning about money and about lending, right? So I don't believe peer-to-peer lending is all that viable. See, I'm a big believer that there is a need for credit. And our current society is very used to credit. Somebody recently sent me a paper, and I'm going to send it to you, Gabe, soon. I've just been busy last week, and maybe we can have this guy on a podcast and we'll talk. And he talked about how lending was done under the gold standard when there was no this rehypothecation and no fractional reserve lending. And I didn't know the details of the lending system during that time, but banks still were able to somewhat create money out of thin air, but it wasn't wasn't like it is today, and then the debt would get canceled. But he has, he references specific things that happened during that time that were actually working for a limited amount of time. And my stance on the Federal Reserve. I think the initial model of the Federal Reserve was reasonable. And then within the first few years, because of World War I, it got completely overtaken by the government. So back to lending. So I do believe that lending needs to be fractionally reserved. I don't believe that there is enough money that people are willing to just lend to other people. And also, small investors have no business lending out money. And if you've never lent out money as a regular Joe, you will learn real quick how to lose money. It's happened to me. I don't know if it's happened to the other guys on this show, but I've lent out my Bitcoin, and this is the Bitcoin that I never saw again, right? So you learned real quick what lending money is like and why you would rather have it done in a fractional reserve way. Now, having said that, the whole system needs a complete overhaul. So there is a lot of fraud and charity. Look, the charity thing is very easily solvable. Just make it transparent, for God's sakes, right? Like every penny that goes.
The charity is easily solvable. The charity, it's the lending stuff that really.
Right. So, because somebody mentioned charity earlier, charity is solvable, especially if Bitcoin succeeds. It's insanely solvable. Just make every Bitcoin address public. You're a charity, for God's sake. You shouldn't even have to file with the government to get permission to be a nonprofit. Your Bitcoin addresses should prove that you're a nonprofit. Anyway, so when it comes to lending, I think that certain institutions. Okay, so there's two ways you can lend, right? So one is you are a really rich person,
and then you will lend. Like a remote control bomb next to your heart.
You're a really rich person. I mean, that's how Wells Fargo started, right? Like the guy literally just got a desk in the middle of San Francisco or wherever and was giving out loans, right? You're a rich person. You're like a Bill Gates or whoever, or like the VCs. There's a reason why VCs are VCs. They're rich and they're able to make 100 different loans, hoping that one of them really, really works out and pays them back, or all of them work out if they're lucky. So if you're rich and you're able to lend this out, then that's fine. Other than that, you get an institution like a bank. I'm not saying the bank is great, but like a bank, and they need specific rules on how to lend it out. And first of all, governments shouldn't be loaned money randomly. It should be there should be a huge check on government.
I think the LIBOR rate for lending to government should be super duper low, probably negative.
Government borrowing money always leads to really bad things. But if this bank, even if they are fractional reserve lending, they're lending it out for business purposes, for companies to grow their businesses. I'm perfectly fine with that. I just want that system to be more transparent, and I want these lenders to be held accountable for stupid loans. Literally, they're putting their stamp of approval,
which nobody has yet. Nobody's been accountable yet.
No one's being accountable, right? Like basically, all those people that lend out housing loans to janitors buying $500,000 houses,
They got bailed out.
well, they got bailed out, but those people needed to be somehow held accountable, right? Like maybe don't let them have another finance job, let them be the janitors for the next 40 years, right? Like, I don't know how to enforce these things, right? But they need to be more transparent where, and by transparency, you also prevent, the bank only giving money to like their cousins opening businesses, right? Like the people inside the bank, right? So it has to be fully transparent, and they'll be held accountable later on for why did they give this business money to expand? Like, what did they see there? And we kind of have it today. We just need the money to be a little more transparent.
So nepotism only, or like a super guard against nepotism?
Define nepotism for me, please.
I mean, like if you were going to hire a whole bunch of your friends and family, like based on personal relationships over qualification.
Well, right. I mean, everyone knows that shouldn't be done, but it still happens. I don't think that's even.
But it's also effective. It's effective though too.
I also think I think that's a small problem. I don't think that's our biggest problem. I think it's a bigger problem in like small towns where like the mayor would award like all the construction jobs to his cousin, right? So I think it's a bigger problem in small towns. I don't think it's a problem in big metropolitan areas.
Interesting. I really think that before we let Gabriel go, I just want to make a quick point. I think that before we can really have these successful decentralized or peer-to-peer lending systems, we're going to have some kind of peer-to-peer identity system, because there has to be some kind of accountability for people who either make bad loans or for people who can't pay their loans. There's got to be some kind of accountability, and that's kind of the really what we're searching for, right? That's the holy grail, at least when it comes to decentralized lending. But Gabriel, what are your comments on the BitlendingClub shutting down?
Yeah, a lot of interesting topics. As regular viewers know, Tone and I are somewhat on opposite sides of the lending issue and fractional reserve as a protected coercive paradigm. Tone believes that fractional reserve should be defended and encouraged in society in order to encourage liquidity in society and to fund projects. I am not of that opinion. So, but I'm also not of the opinion that fractional reserve should be enforced in any way. So basically, well, first of all, let me just say we are in the midst of a peer-to-peer lending crash. Nobody's mentioned it, but the mainstream lending companies are basically in a state of collapse currently, which says a lot about the state of the economy at this time. It's really precarious in the West. Consumer debt is at record levels. Corporate debt, bonds are crashing. Is that correct, Tone? Would you call this a crash right now, or just on the decline?
I actually would not. I'm actually looking for a graph right now.
Okay.
And,
Well, they hit a bump too with
that I want to show you.
Okay. So it's not quite as clear of a picture.
It had been, but there's been a bit of a bump from the recent administration change that caught everybody by surprise. Our projections had been getting pretty long and projected, and then with that upset, they kind of shuffled.
Okay. Yeah. So it's not quite as clear of a picture in corporate debt, but regardless, peer-to-peer lending companies are collapsing right now. They have huge default rates
and being investigated, I believe, too. A couple of different ones.
Right. So because because of improper lending vetting, I believe was the reason. So they're not checking to see that borrowers are meeting the minimum qualifications, etc.
My shit's AAA, Mr. Banker. Just take my word for it. Give me my money today.
That is precisely the danger of a fiat system of fractional reserve. Tone appears to, and this is my opinion, Tone appears to be living in a fantasy world where you can use policemen to enforce laws on people that prevent them from doing predatory lending or from doing subprime or skipping over those things. I think that's a losing battle, and it's also impossible. You are not speaking in a way we can hear anything. I think you're muted. We can't
He just screamed himself hoarse.
What was that, Tom?
Centralized smart contracts. Decentralized
smart contracts?
No, centralized.
Centralized smart contracts.
Like a notepad.
So coming back to some more things that Tone was talking about, which are very interesting. I can't wait to read this paper that you're telling me about. That's great. Definitely send it over for for you watchers. Definitely keep an eye out on the World Crypto Network for Tone and my conversations that are coming about fractional reserve, and I'm going to be learning as much as I can. I do not come from the finance industry, but I will be reading up on my Hayek.
But he loves usury and he hates the goys.
I missed that. What was that?
I didn't say anything. I just said that you love usury and you hate the goys.
Oh, usury, right? Yeah. So sound money lending practices that's one of the reasons I want to check out this article, because I was thinking about it even before you said it. I was thinking back, like, we're going to have to bring back some of these practices that just have completely fallen out of favor because we haven't had sound money for decades and decades, and nobody's alive that remembers a truly gold-backed paradigm, like pre-Bretton Woods, really. There's maybe a couple of 80-year-old, retired stock traders out there, but really nobody knows what was, anymore.
Everyone's used to just free money.
How dare you treat those 80-somethings as an afterthought?
Everyone's used to free money like a crack addict.
Right. So exactly. So we've got, that's great. I think we will need to reach back to look at what banking was like in the 19th, 18th, 17th, 16th centuries, when there was plenty of lending. There were plenty of, not privateers. Those are like sanctioned pirates. Plenty of, merchant.
Privateers is the word.
Not privateers. Plenty of merchant, sailing voyages that were funded with debt, that expected to get a return on their investment and did. There was plenty of activity back then. It's just was done in a different way. I'm assuming there was definitely less lending than there is now, which I would argue is a good thing. So you're going to look at things like sound money venture capital, where they're going to be there's no danger of neither malinvestment nor improper vetting if you are on the line for that loan. If you actually are on the line for that loan,
removal of moral hazard.
Right, and nobody's willing to insure you, or your insurance is too expensive and it cuts your profits down too much, then you're going to be a hell of a lot more careful with your lending practices and finding and vetting borrowers.
Well, it's going to be closer to natural market lending and borrowing, which is a self-correcting system that people seem so just horny to get rid of.
Exactly. Tone is of the opinion that not enough projects will get funded in that paradigm. I'm of the opinion that by reducing the requirements for borrowers, you are actually misallocating massive tranches of capital in society to projects that should not get funded just because of nepotism or any other human weakness that it depends on, as opposed to actual actuaries.
Yeah, I
risk
mean, like
analysis.
requirements, standards, situational,
Yeah.
consistency, whatever you want to call it. Yeah, I mean, they're
Yeah, you're
definitely
going to
has
do
to be.
due diligence if you're on the line for that cash. If you don't get paid back.
Well, and a lack of due
So
diligence is a problem with almost all things which are made public, whether it be healthcare or anything. The government needs to be getting in there
right.
as an activist and making sure that it gets what it's paying for. But since the government isn't an actual person, it's just a decentralized diffusion of responsibility. It is a hard time doing that.
It seems there's no moral hazard
It's
in that
exactly, and
situation.
it's
Well,
terrible.
there's ultimate moral hazard almost.
Right, exactly. And so government is terrible at doing that. Government is terrible at regulating. And, it fails all the time for the exact reasons that we're talking about, like nepotism. Now, just a quick aside to Tone, you're talking about the Fed was formed and then, oh, geez, we got this World War I thing. That's just terrible. We didn't plan for this, and now we're going to have to use the Fed to fund the war. No, that's not how it works, Tone. Those central banks were all created in order to fund the war that was being planned by the same people, so that so they could make money from all the different sides, borrowing from them, and borrowing gold from them and borrowing the things from them, so that they could sell them all of the weaponry. It's all works together. World wars are impossible without central banking. You're living in a fantasy world if you think that you can have there's a coincidence that central banking has
So you're saying that you're saying we still go to war based on beads and trinkets?
No. Like world wars. World wars are impossible without central banking and fiat currency. World wars.
Yeah,
obviously,
exactly.
regular wars, territory wars, that's been going on forever. But
Right.
world wars, specifically targeted at specific countries, where the banks win on both sides, the banks win.
Right.
Whoever wins, that's only happening with fiat and central banking.
Yeah, and this idea of governments, you shouldn't be able to lend to government. Government is the ultimate arbiter of money and coercion. So to say shouldn't is just totally useless. That's not of any use to anybody. That's not going to discourage them at all. You have to disintermediate this whole process if you want that not to happen. They're not going to do it themselves, ever. And even if they said they wouldn't enforce it, and they would do it anyways.
And you disintermediate through decentralized consensus?
Precisely. So coming back to this idea of fractional reserve and creating debt out of thin air, I am not.
Gabriel loves Hillary.
I am not saying that debt creation won't happen anymore in a crypto paradigm. Far from it. In fact, I think we're going to see just like we're going to see new forms of or old forms of sound money lending happening as Bitcoin really takes off. I think we're going to also see interesting, even a lot more of these ICO type situations and DAO token situations where debt is issued, or not even debt necessarily, but equity in platforms is issued in the form of debt tokens or in the form of ownership tokens. Actually, they're not really debt issuance in that sense. It's quite the opposite. They're equity issuance. It's just a very low value at first.
Yeah, I was going to say we're going from debt to equity.
Exactly. Yeah. So that's
equity.
Yeah, but so you can create equity out of thin air,
like dequity.
Right, exactly. DApp equity. So basically, it's the ICO, it's the classic scam that a lot of these people have been pulling. If you do that and you have a real idea that has real value and a real team behind it, then it's conceivable that you could raise some capital and do this sort of decentralized equity, do the crowdfunding, app crowdfunding with DApp tokens. So I think we're going to see a lot more of that, where you end up with huge, pools of losses that people invested and didn't get the return on the money, and then huge pools of wins where they happen to, all come together and create a big DApp that actually was super profitable and did increase the value of these tokens, color coins, whatever it is.
like let's get outside of the realm of this of these spectacular failures and say, let's say there was some Kulu implementation of some kind of a blockchain empowered, actually immutable investment that was a derivative that was responsibly made of various different Bitcoin investments and stuff like that, and that was debt that actually couldn't be inflated or leveraged 33 to 1. I mean, that seems like the kind of debt and record keeping that could actually be made to make a system that would be superior in very many key ways to the FICO systems that exist today. And I think that that kind of debt and economic system creation is something that a lot of us are on board with, but we see the just horrible molestation of the legacy situations, and we end up just talking about all negatives instead of how awesome that situation would be that I just highlighted.
Yeah,
and that's coming. That's coming.
Yeah, exactly.
We have to go through the DAOs first. I'll let you finish, Gabriel. I'm just saying we have to go through the DAOs first and the learning process before we can have such a thing that you described, Gabe, or that you described, Blake. Go ahead, Gabriel.
Right. Exactly. Yeah. And I just, before I go on and finish up, I will mention that Tone was actually hinting a little bit at a debtor's prison. He's saying, oh, these borrowers have to be held responsible. Well, now you're just muddying the waters, like is typical with a government paradigm where you have coercion at your hand to help you force the market, force people into doing things.
A medium needs to become less valuable as people shit on their commitments to it because they weren't vetted properly. You can't go in with a fucking violent system and try to bludgeon somebody to death to try to get your value back. You should have vetted them better, and if you didn't, it's your own fault and your system sucks.
Exactly.
Yeah,
A debtor's prison paradigm is not lending. That's something else. That's a different paradigm.
Gabe, I didn't mean the borrower held responsible, the lender.
Oh, okay, great. Then I completely agree with you, obviously.
Yeah,
so I just want to wrap up.
Sorry, if the borrower clearly was lying, then yes, the borrower needs to be held responsible, right? But if the borrower isn't proven to have lied to get the money,
for sure, and that's in the semantics of contract law. Like contract law is totally on your side. Like we know what you meant for sure.
Yeah. That's tort law, and so in a sound money system, you're gonna I mean, violating mutual assent is a separate crime if you lie when you go into the term. Exactly. Right. So that's a totally separate thing. That doesn't actually, anyways, if you are a sound money lender and you're not doing due diligence to check up to see whether somebody's lying or not, that you want to leave it up to chance, not up to any facts that you can control beforehand as a lender. But I just want to say that this scenario that we're describing together of sound money lending and crowd-funded, crowd equity creation of new platforms is inevitable. It's ineluctable. You cannot avoid the reality of these things coming. If you do not have evolution. Right. Not only is it an evolution, but if you do not have, I think fiat money will die this century. If you do not have a coercive paradigm forcing people to use your token that you create it will lose all value and stop and leave circulation. At that point, you've only got people will only choose sound money or some sort of equity speculative instrument. They will never choose, if they have better money choices, they'll never choose your shit money. Gresham's law won't apply, because if you're not forcing it, people will choose more utility. And so this whole idea of fractional reserve lending will be a moot discussion. Sure, any bank, just like in the 19th century, can issue its own paper. If you can persuade people to use your crap, then by all means, go right ahead and issue your script to your heart's content. And I'm sure in the early years after government fiat collapses, that will be tried by a lot of people, a lot of scams, just like there's a lot of altcoin scams. A lot of tokens will be created and a lot of crap script will be created before people figure out, oh, we just have Bitcoin and it works great. And so I don't think there should be any laws or coercion preventing fractional reserve at all. If you're good enough at fooling people, go right ahead. It's not going to last very long, and you definitely can't build a career on it, and you certainly can't build a long-lasting business on it. I have a feeling all those scams are going to be in the early waves and people will cotton on quite quickly, then we'll be in a sound money and equity crowdfund paradigm.
They just won't be able to compete when your competition is Bitcoin. You know, your coin, your fiat, your token, it will never compete with Bitcoin, at least as the Bitcoin network effects are today. There will be no other Bitcoin. There are going to be a bunch of other different coins, but one day the world will wake up and realize that the most sound money in the history of the planet of Earth is going to be Bitcoin for now. And again, if that fails, then, you know, if something goes wrong with that, we'll build another Bitcoin. But something like Bitcoin with a limited supply, you know, and proof of work, that is what's going to be the world's token.
All right.
So go ahead, Tone.
Just gonna make,
right up there.
yeah, I'm gonna make very few comments, as you know, probably should go to bed. So very quick. I don't the system that you just described, Gabe, of banks creating their own money. We had this after Andrew Jackson eliminated the second bank of the United States. It became insanity in America. Every bank was creating their own notes all over America. Nobody knew what was legit and what wasn't. Counterfeit notes were everywhere. In fact, I believe the Secret Service was even created to deal with this issue of just anybody making notes and claiming it to be legitimate from some bank on the other side of America.
It's not entirely true that people didn't know what was real. People knew that gold and silver were real, and they used it a lot because there wasn't a paper paradigm that they could trust. So that was a thing that people used.
No, I mean, paper money was already in use at that time. But anyway, yeah, and the whole World War I stuff, that's way too conspiratorial for me. I'm gonna stay away from that. So I just wanted to show you this chart because you mentioned about, you know, the public and how much money the public has, and I know everyone says like, oh, the people are broke. This chart seems to contradict that. It's household net worth, and it's pretty damn high. I mean, this is about a year old now, but still.
I was mentioning credit debt, actually, household credit debt, not household net worth.
Yeah, but see that the beauty of household credit debt is that it can disappear, like what happened in the housing crash. Like your credit card debt, like literally it can disappear, right? I personally have like over $100,000 in credit lines, and if I max out all of my credit cards because I'm broke and have no job, the government can't, or the banks can't come after me for this money. But this is unsecured debt, right? I mean, they will have a problem collecting it. And this debt will just be extinguished in bankruptcy. And that's the good part of it. Now, when a government racks up a bill, things become a little bit murky. But then that's what I mean. Like credit being high, I don't think it's the end of the world because it is distinguishable in bankruptcy. Now, student loans, that's a problem because thanks to the Clintons, student loan debt is not discharged in bankruptcy, and that can get you in trouble. I'll end it there.
To the moon. Let's going to the moon to me. I'm going to buy.
To the moon. All right, cool, guys. If nobody else has any comments, I think we can end the show. That was the final topic for the evening. Oops, there we go. Yeah, Tone, you have your video. I can see myself.
Well, I guess as a final point that I think is important to address for this topic. I mean, all this debt and stuff, and like time preference comes into debt and how much the interest rate should be, and then the LIBOR rate, and then the huge scandals there, and then basically one of the biggest solutions in the West is how are we going to fix all this stuff? Will we dict up real estate and stuff? Well, let's just push all this debt onto the next generation and charge people from 18 to however old non-dischargeable student loans, and non-dischargeable debt being issued to minors and having that be the way that we're going to shore up different things is disgusting. It's horrible. It's fucking humiliating, and everybody should be upset about that.
Exactly.
Student loan being allowed to, like, that debt being allowed to be our next bubble, and us not speaking out against the bastardization of our youth is I think it should rustle everybody's jimmies, and I guess that's one of the big points about debt that I want to talk about. I'm excited about debt creation in the crypto space in terms of tenable collection and stuff like that, and figuring out new systems of by which there needs to be several different things, whether it be oracles or the way that you apply. A few things need to be figured out in terms of debt in the crypto space, but what we can definitely be sure of is that people don't want predatory, non-dischargeable lending to be offered to the youth, and if we can avoid that happening in crypto debt issuance, that should be fucking task priority number one. And I don't think there's going to be a lot of people that can disagree with that.
Yeah, it's just crazy. If you look at the graphs of the student debt, it's just since the Clintons basically allowed that law to be passed, it's just like this. It's just like straight up. These poor students can never be able to pay that stuff off. That's because the prices continue to rise for college and the debt continues to grow. So there's just no way of ever paying it off. It is a bubble. It is going to pop. And unfortunately, our youth is paying for that right now. And so I hope that we can definitely avoid that in the crypto space, and just and even in the regular space somehow get that freaking dealt with sooner than later, because it's going to be bad.
The Clintons are responsible for a lot of financial insanity, which is why I was kind of pissed at Trump for not pointing it out during the debates. Clintons are also responsible for removing Glass-Steagall, which allowed all these banks to be hedge funds, right? So I mean, and there's a lot
crazy.
of
I mean, you might as well call them the Clinton the biggest banksters, because they allowed for things like the 2008 crisis. I mean, it was the passing of the laws by the Clintons that allowed all this financial, like you said, Tone, like this financial insanity to occur. It didn't used to be like this. So this is where we're at. But we hope.
What is Aleppo?
What?
What is Aleppo?
I don't know. What is Aleppo?
It's a city in Syria. What did Clinton say? What is Aleppo?
No. I was just having to just re-illustrate how poor the choices were. I mean, we had Trump, Clinton, and then what is Aleppo?
Oh, right. That was Gary Johnson.
Good old Bill Weld.
Well, obviously, we know that we've criticized democracy too here on the show. Obviously, we know that we don't really live in a democracy right now. It's more like an oligarchy. And even if we did live in a democracy, all that it means is that the interest groups, the private interest groups, the corporations, and the governments will give you a few choices that they choose for you to choose, that they select for you to choose. So it's
name the leader of a foreign nation. I'm having an Aleppo moment.
All right, we'll end it there, guys. Thanks so much for joining us. We had a great time. Thanks to everybody in the chat. Thanks to my panelists. Thanks to my guests. Thanks to everybody. This has been a great show. We had a lot of fun. I can't do it without you guys. I'm terribly retarded compared to you guys when it comes to the financial stuff. So I really, really enjoy listening to you guys and your information. It's been very helpful to me, and I hope that it's been helpful to everybody else as well. So thanks so much, guys. Tone, where can we find you?
My blog, libertylifetrail.com, and on Twitter under tone_LLT. Other than that, just conferences all over the world. Just
Tone doesn't
my name.
sleep,
I try to keep a calendar.
Tone doesn't sleep, people. Tone doesn't sleep or stay in one place. This is what makes Tone. So if you guys see him, definitely say hi. He's at every Bitcoin conference, and he's a nice guy. He'll definitely shake your hand and say hi. So Gabriel, where can we find you, man?
Just find me on Twitter is probably best. Also here on the World Crypto Network. My Twitter handle is Gabriel Devine, at Gabriel Devine. And check out my show Future Rant. I will be continuing the show soonish, so stay tuned.
Awesome. Blake Anderson, where can we find you?
Well, that's become complicated. I recently got banned from my Facebook, and between my different Facebook profiles, I had almost 10,000 people. But after Mark Zuckerberg decided that he was going to crack down on fake news, I published very many articles about him consuming live dolphins and joining ISIS until he made his completely within his rights call to suspend me from that network. So now you can go ahead and find me on Twitter at Bitcoin Blake. But I don't think I'm going to be on Facebook anytime soon. Zuckerberg did not like my articles repeatedly saying that he joined ISIS. So don't test him.
Good riddance, dude. Good riddance to that freaking network. I'm sorry, dude, but Facebook is just drama waiting to happen. If you want to talk to somebody, freaking IM them or tweet them or call them on the freaking phone. You don't need to have a constant like Facebook conversation with everybody. I'm not on Facebook and I never will be. So no thanks for me for that. But hey, to each their own, right? To each their own. So I also just want to thank Ansel too. Ansel Linder, he couldn't be here tonight, but he gave me a shout out on his show, bitcoinandmarkets.com. So I just wanted to give him a shout out. We usually have him on the show. He couldn't make it tonight. So he's got a great show, great podcast, bitcoinandmarkets.com. Definitely check it out, guys. It's good stuff. And so I think that's about it. So thanks so much for joining us, guys. We really appreciate it. We'll see you again on the World Crypto Network YouTube channel, hopefully in a couple of weeks, Monday at 8 p.m. Pacific. Until then, guys. Until then.
All
see you guys later. Have a good
Bye-bye.
night. Bye-bye.